Hello and welcome back to Market Shares. I am your host, Tony Blodgett. And in this episode, we are going to continue the conversation with Anton Stetner. In our last episode, if you didn't see it, we talked a lot about the changes here in Washington State as it relates to the new millionaires tax, what the impact of that is going to be on real estate. And we dove pretty deep into that topic. In this second half of the episode, we're going to get a little more specific with Anton about what are the investment opportunities that are working in today's market. Everything from DADUs and attached units, middle housing, fix and flips, and where the commercial market's at, and all of those things. Anton, as you know, is someone who I do some investing with personally. He is an expert at the local market here, and I think we also will pull together some ideas and strategies that you can pull from what's happening in your local market to really up your social media game. So please enjoy the second half of this conversation with Anton Stetner. Here we go. I want to talk a little bit about just kind of where the investment market is at right now. Because, you know, we can talk about these big changes, but it doesn't really change where the deals are. You know, I mean, I think we'll see how it plays out. This is all happening in the last 30 days. But I mean, if you're thinking about the last 6 months, you know, we talked a lot before about DADUs and ADUs and what's going on with that market and the conversion of you know, older homes into, you know, middle housing, right? Like the 4-6plex type things. And I think that was a big, there's a big movement for that and a big need for that. I'm curious your thoughts on how is that market evolving? Is it still a good investment? Does it pencil for people? What is that? Let's start there. Let's start with the ADUs, DADUs, middle housing.
So let's define what we're talking about, just so we make sure the audience is all together with us. ADU stands for an accessory dwelling unit, and in our area, ADU usually means attached to the primary structure or the single family. DADU stands for detached accessory dwelling unit, aka a standalone. My joke here is, all right, well, what's an ADU or a DADU? That's the old mother-in-law, but a mother-in-law is a protected class. So now we call it an ADU or a DADU. Okay. You know, bad joke, but you get the idea. And right now, the numbers still pencil where the ADU, DADU play Pierce County, King County, Snohomish County, the whole metro. It is the absolute 100% best investing opportunity that we have, because I believe it's one of the best investment opportunities that's accessible to a low-level investor, a starter investor, even the first-time home buyer. So I've seen loan products now that have where you can owner occupy the primary. You buy the single family up front, and they will give you a construction loan to build the DADU, ADU in the back. I've seen them also where you've got the single family up front, and they've got a construction line of credit to build the one in the back. So there's these new and innovative products that are happening for this housing type that's very specific to Washington. What we're seeing, though, is we're also seeing a little bit of pushback, the NIMBYism. It's changing the character. We don't like what this is. And so these cities start laying on regulations and red tape and slowing things down. So most people don't know, the Master Builders Association has been paramount in Washington State, and the BAIW, which is the Builder Association Industry of Washington, also huge groups, plus some of your local political action committees, some of your title companies, really being unbelievably helpful and protecting that middle class and that opportunity for people. So one, the DADU ADU play, I think, is the absolute best. Two, I think people need to also look at it for aging in place. Mom, dad lived in the front house. Maybe we need to now build them a cute little rambler in the backyard. That also comes in with the rural DADU. So the rural DADU in Snohomish County right now is 1,200 square feet on a 200,000 square foot lot or above in the R5 zoning. Washington State, though, 2 weeks ago, just passed a bill that now is requiring rural DADUs everywhere. So Snohomish County was kind of ahead of it, the poster child for the rural DADU. The Washington State Legislature looked in and said, you know what, they did it right, and they passed it a little bit better. They say now the rural DADU will go up to 1,296 square feet, so just under 1,300. They want them to use the same driveway. They want them to be within 150 feet of the primary structure, have its own drain field, and have adequate water supply. All of that's amazing stuff. What that does is that adds in the ability for that first-time home buyer, for mom and dad on that 5-acre piece to now go build almost a 1,300 square foot. That's a real good-sized house, So that is really. That's going to massively help because that's also now going to start showing up in all the other counties versus Snohomish County, I think, really piloted that one. So one, I think that's the best investment. Two, you're seeing a lot of it. In Everett, where we're recording this, there is one builder here in Everett that has 50 DADU permits in for his company. That is amazing that someone has put that much into the pipeline. And once again, a lot of people had a meeting in the last week and a half with the city of Everett, with their planning director, and a whole bunch of people to talk about streamlining the permitting process because Everett got so inundated. And I think it was Tacoma or Renton also did too. They got so many applications that it clogged their systems. So they're working on, it's called a basic. A basic is when you have like a plan that's fully approved, they're going to approve it faster. They're coming up with innovative ideas to make this happen. So I believe, one, the ADU DADU play is the absolute best. And there is between 75 grand to 150 grand per DADU, maybe 250 in the right location that can be made there. I think that's going to go on for another couple years, and then we'll probably see all land prices rise to compensate for the ability to build an ADU or a DADU. I want my house hackers thinking about that. I want my first-time homebuyers thinking about that. This is an amazing equity tool. My multi-generational people, I want them thinking about the rural one or moving down. Middle housing. The middle housing stuff has been implemented across most of the cities. You're not seeing as much of that as I thought we would.
Yeah.
And part of that is because of the Growth Management Act in Washington State. That was what was put together in the 90s. It's what controls suburban sprawl. It says this is the zoning and here's where things go. By artificially pinching supply, Tony, it's forced land values to be so high, it doesn't make economic sense to bulldoze that single family and build 3 units, 6 units in its place unless it was really just like uninhabitable.
Right.
Or it's in a high cost area like Kirkland or Seattle, but you're not seeing as much as the middle housing really outside of King County. Now in King County, a lot of areas I think it makes great financial sense, but the numbers are hard to pencil. Another one that's coming that got passed is called the lot splitting bill. The lot splitting bill has to be implemented next year. And what the legislature saw, so it's very interesting. The legislature is becoming pro-housing while at the same time they're passing these crazy taxes. So they are acknowledging our housing crisis and they're actually starting to finally do something about it. So I'm proud of everyone who's been pushing on that. But the lot splitting bill is the old school 2-lot subdivision. So back in the 70s, you just used to draw a line, submit the survey, boom, you got 2 lots. You didn't have to put in curb, gutter, sidewalk, and do a bunch of improvements. It wasn't super expensive. Now, a 2-lot short plat in most areas is going to cost you somewhere between 40 to 70 grand in paperwork and then about 150 to 200 grand in improvements. It doesn't make financial sense. So the state legislature said, you know what, we're bringing back lot splitting. So you're going to be able to do the old school 2-lot short plat by simply drawing the map. There's a lot of large lots all throughout the metro that is going to make sense to do that. So I want our listeners, your subscribers to Tony's amazing podcast here, to be looking for opportunities on large lots that you're like, you know what, 2 homes would easily fit here. Maybe I could buy the home 5 to 10% below market because it's a little beat up. And then I'll just use lot splitting next year to create a whole nother lot. That's a lot of value, an enormous amount of value that's going to be created. So that's what we're seeing there. We're seeing really high demand for duplexes, triplexes, fourplexes. When rates got down to the 599, that investment market was just kicking. Now,
And these are investors, right? So they're just finding that they would cash flow better when they're with the lower rates, right?
but most of them that we were doing or we were seeing, they were putting 35% down. I mean, big down payments in order to make them, cash flow even at today's rates. The 5-unit to 20-unit market, now we're just talking multifamily here and we're jumping into commercial debt, is, in my opinion, it's kind of overpriced, but there's not good financing in that ballpark. You got to get above like a $4 million loan. You get above a $4 million loan, you can still get rates like 4.5, 5 right now, but you got to spend a lot of money. So there's a no man's land between the fourplex and the 20 units where people are trying to move up the property ladder. And so we were having a strategy meeting with one of our investors. We're like, I know you want to sell one. If we go sell 6, he's like, 6? I was like, well, if we sell 6 all at once, we can get into this. And I get it. It's a big loan, but our value and our cap rates and our yield and everything just fundamentally changes. You're not seeing as much warehouse being built right now. Okay. Because they built a bunch and it's still not all the way filled up. And I do believe that's going to continue to fill up though over the next, couple of years. You're seeing good warehouse conversions from older warehouse that doesn't make sense today. And, the new warehouses, they've got really thick slabs so they can support the heavy equipment on them, support the really high stacked stuff for, like Amazon.
Right.
And you can basically load on one side and then kick it right back out the other side. So you're seeing a reinvention of the old 70s and 80s warehouse, which I think is fun. You've seen A, B, class office in the burbs kicking butt. This really surprised me. A and B, like Marysville, Everett, Shoreline. I'm not talking Bellevue, Kirkland, Seattle, but that stuff that's not in the primary has been really cooking. The medical office space really cooking. Massive demand for storage units, massive demand for RV parks, mobile home parks. So the hard, really beat up sector is parts of the multifamily that's stuck in bad debt, where their debt's coming due. And then office in the downtown corridor, specifically in Seattle. Seattle has the highest office vacancy rate it's ever had right now. It's like 30% vacant, 35% vacant.
Well, and I think insult to injury, aren't they talking about a vacancy tax to put on top of
that's just asinine. That's so once again, I'm a simple man who enjoys simple things, and I enjoy proven economic models that have worked throughout history. That's called ideology, and that's ideology getting in the way of the economy. No business owner, no investor in their right mind actually wants something vacant.
Right.
They don't leave it vacant on purpose. They actually can't rent it. So if you then tax them, they're just going to have to sell the stupid building.
Just saying, it's kind of interesting.
So,
so let me ask you about just your standard fix and flips. Are you seeing those happening much?
You are and you aren't. So let me explain. Fix and flip got so popular there for a while, and money was so cheap, and the market was moving so fast that from basically, let's call it 2018 to 2022, I think we ate a lot of the garbage inventory during that cycle because you didn't even have to be good at flipping. You could be half-ass bad contractor because the market was going so vertical, it covered up your mistakes.
Right.
So one, we already rehabbed a lot of the really bad inventory. Two, because prices have shot up so much, you're not seeing as many flips as you used to, but the ones that you are seeing, they're pretty nice and they work out pretty well for the people who are doing them, but they're more of the veterans. You don't have the wannabe flippers around right now.
Right.
And same with the builders for that matter. The builders are exactly the same. The builders are rolling low and slow. They're not overextending themselves. They're backing out of deals that don't make sense. If you see land projects and they keep going pending feasibility, the numbers don't pencil. You just keep popping out over and over and over again. But the builders are being cautiously optimistic. And so they're just slow. I'm just going to go build my consistent product. Right now, Washington State is projected to bring through about 36,000 units this year. We need 77,000 to start to backfill the deficit that we're missing. We would need 50,000 just to keep up. We're supposed to have 1.1 million new units by 2044. We're so far behind on housing. So this is the golden, ignore the millionaire tax, ignore the doom and gloom. We're so far behind on housing that even though the numbers may be slightly down or slightly depreciating today, you have built-in forced appreciation due to the lack of supply.
Right.
Massive built-in.
Right. Well, and I think with the million, I mean, look, the ultra luxury market it's always been its own kind of thing, right?
It's its own beast.
I mean, I think that it does point a lot to the reaction to the millionaire's tax and some of the other big taxes we've seen in the last couple of years, but I don't think it's representative of the market as a whole.
Correct, yeah.
And what the impact's going to be of those changes. And so I think for, as you said, and as I've talked to Mike about and other people, I mean, there's going to be demand for a long time. It's just the timing of it, the affordability of it. What can we do to make sure that those units get built that need to get built, and that the builders and the investors, there's not so much red tape and bureaucracy that it's not worth doing, know.
Oh, one other thing I want to add in is most of the apartments that you see finishing right now were all started in 20, 21, 22, and part of 23. You don't see a lot of large apartment buildings coming right now because the model doesn't make sense, which means that you're going to run into, starting in late 2026, definitely in 2027, you're going to run into a lack of rentals coming down the supply line because those permits are down by 80%.
Yeah, so what is that? I mean, you're right. There was a period there where, man, these apartment complexes were going up
everywhere.
Crazy. So what changed?
Interest rates. So when you take interest rates from 3 to almost 8, and that builder debt went from 5 to 10, 12, whatever it went to, those projects no longer made sense. The people finished that had to finish. And there's and I forget the number, 1.5 trillion, 2.5 trillion, but there's trillions in commercial debt that is coming due starting over the next couple of years that has a 3 handle on it that's now going to have a 5 or a 6 handle on it.
But I think the banks are going to have to renegotiate that stuff.
They're going to have to renegotiate.
I mean, they're going to have to make concessions because I don't think, but what it does point out to me is it sounds like rents are going to go up.
Rents are going to go up. So rents have to go up due to that lack of supply.
Yeah.
So understand when we talk about prices are slightly down, what I'm telling you is, from a data perspective, ignore the rest of the world and the economy. This is a blip, and this is an opportunity to go buy and invest because the long-term pipeline is there's a big hole that's missing both on the for rent and the owner-occupied side.
Yeah. Well, I think this is good, Anton.
Awesome.
I think we should call it a day. I mean, look, we talked about a lot, and I think for those of us that live in Washington State, this is a little bit of an emotionally charged conversation, and it doesn't matter kind of what side of the argument it's on. It's just elevated right now, and I think that it is a blip in time. It's going to be very interesting to see what happens to that ultra luxury market. I think it's going to be impacted, and it potentially could be impacted for a very long time. Time will tell. We don't know. There's going to be a lot of challenge and opposition to this millionaire's tax, and there's good reason to believe it might get struck down because, well, it is unconstitutional as of the way that it sits today. So, there's a battle ahead. But I hope that even if it does get struck down, that there is enough uprising to give at least some pause to the legislature to think about the decisions that are being made, and at least let's start talking about balancing a budget. Let's give some airtime to what could we do that could cut down spending while also talking about making sure that we have great programs. I mean, look, there's no question. I've visited some of these states, Anton, where people are moving to, and they don't have an infrastructure like we have.
No,
There's a lot of
and they don't have. Our area is beautiful.
yeah, there's
It's
a lot
amazing.
of amazing things about the state of Washington, but there's this balance, and a lot of the growth and infrastructure that we've been able to build and invest in is on the back of the tech industry.
Yeah.
And if you are making policies that have unintended consequences for the tech industry, which keeps new technology companies from coming here or keeps the ones that are here, and they start leaving, like there is going to be a trickle down impact to those decisions, and it's going to become very difficult to balance the budget in Washington over time. And you can't just rely on continuing to raise expenses. You have to at least bring up the expense side of the P&L, in my opinion. So I hope that that becomes part of the dialogue, and we see some reasonableness to the approach to the local government, because I think the trajectory they're on right now is going to eventually wear things down, and maybe this was a wake-up call.
Hopefully, because it's not sustainable. And the main thing that I would love our politicians to focus on is affordability and stable communities. How do we create that opportunity for that next generation? Because that's what keeps everything moving. If people grew up here, how do they stay here? Like you said, how do they put down roots and become a permanent fixture in our community?
Right.
That's the most important thing.
Right. Well, I'm glad we did this episode, because doing a market update is so challenging right now.
Oh my goodness. Yeah.
Because the market changes day to day. Like this war, you guys have heard me talk about it on this podcast, how dependent interest rates are to the price of oil and all of this instability that's happened. Look, we know it's no fun in the mortgage and real estate industry, but I think that you said it earlier. I really and I believe this. This is a blip. Now, how long of a blip, is this going to be? I think we take right back off where we left off at the end of February before this war started.
Yep.
And I think we take the standard ramp up to the spring season, and you maybe push it a little bit into the beginning of summer. But I think you're right. The demand is there. Don't stop doing the things that you were doing, and don't lose the excitement that was building as we came into the end of February, because I think it's just a little bit delayed, and I think we got to lean into the positive signs we saw in the market, because I think it does tell the story. I think if you were looking at a graph, I think the graph is still going up. It just had a little jolt, and I think it's going to keep going. And so I don't want anyone to lose their optimism about their personal business, the growth they've seen in their business. I think that it continues. I think we got to get through this war and put this behind us. And I'm confident that's going to happen.
Yeah, me too. And so I feel like it's really not that far away. Yesterday I was chatting with another real estate broker in the area, and we'll close with this. How long was the great financial crisis really hard? And he goes, it was about 4 years. And I said, yeah, totally. That's exactly the numbers. It was 4 years. I said, when did the Fed raise rates? And he goes, 4 years ago. I said, we're basically at the end of the hard. So if you've survived this long, if you've been doing the business, don't be discouraged. This is opportunity, and it's a continuation of deal season, but it's also your clients are looking for you for guidance and for hope and for what's actually happening. And you need to over communicate with them in times like this. be there for them because they're experiencing stress. So just over communicate with them, reach out to everyone more, and create that next level of opportunity, because I believe, one, it's coming on the back end, but also just from a larger macro, I think we're done with this cycle and getting ready to move into the next one.
Yeah, no, I agree 100%. Well, you guys, thank you for your time and attention. I know it's a long episode, probably be 2 episodes. We'll see how this all edits out. But look, I appreciate you guys tuning into Market Shares. I know some of you just love listening in the background and hearing all this. This is a lot of stuff about Washington. But look, I think it's I think it could apply to any market across the country during different times. And so I hope you think about that. One of the things I hope you take away from Anton today is part of the reason why he has the success that he has is because he is involved in his community. Yeah. He goes to the master builders meetings. He's part of goes to city council meetings. He's involved as a local real estate professional. Those are the things that get you the inside track. He knows what's coming before it comes, and he's involved with the people that are helping to make those decisions. That's what makes you an expert in your market. So, learn from that example, and look, be always willing to learn, take in new information. Don't be one-sided with your thinking, and try to see all perspectives, but also don't be afraid to have an opinion, for yourself. And look, every Friday we put out a new episode of Market Shares. If you enjoy this content, share it with someone, tell someone about it. And until next time, take care.